Vice President J.D. Vance hailing great progress after the first round of U.S. and Iran talks in Switzerland. Mediators are now setting up a roadmap for a final deal within 60 days. The vice president says that Tehran agreed to invite international nuclear inspectors back into their country. And after a series of threats over the Strait of Hormuz, Vance says oil is flowing.
We wanted to build a mechanism for keeping the Strait of Hormuz open. It is open. We've seen, of course, gas prices and oil prices come down, millions and millions of barrels of crude and natural gas flowing through the Strait of Hormuz that weren't flowing before. But we also wanted to make sure that we actually set up the coordination mechanism so that we could demine the Straits of Hormuz, so that when there are the conflicts that inevitably come up, we can make sure we work through them rather than that leading to escalation.
All right. So, Jessica, I think we've been having this debate for months, but certainly last hour about sort of the signals that the equity market and oil are telling us. And I think we're trying to figure out oil at 75. Do we believe that the strait is open, that we'll demine, that there won't be escalation? Equity markets, I'm curious your opinion. Mine is they've totally read through this and they're focused on AI and they're like thinking that this isn't that big of a deal. What signals do you take from the market? What is it telling you?
Yeah, so with oil retracting and staying there, it's definitely telling us, to your point, that the equity market's looking through oil. We're going from a very good earnings season, but now we have increased headline risk. But really what to pay attention to is the bond market, because I want to understand if oil is coming down, how is that feeding into inflation expectations? And seeing the 2-year spiked where it is, hitting new 52-week highs, which actually happened when Kevin Warsh was speaking to me, was just, it's a yellow flag in my mind, if you will, as far as how equity markets are digesting that. But more importantly, it's the impact of the bond market that then flows into the equity markets. But overall, I mean, the inflation data did show some energy creeping in. We have PCE this week, so we'll see if that's validated. But really, the takeaway for me is we've got 60 days of headline risk. It looks like a deal is on the table. Oil staying down is validating that. Now I just want to watch the 2-year, the 10-year, and the bond markets.
Dagan, let's talk about that, because we've often debated equities can climb higher if yields rise, as long as yields are rising because they're pricing in higher growth on the horizon. Equities sometimes can't rally if yields are rising, if they're pricing in higher, stickier inflation on the horizon. So today you have a 30-year that's back up to a 4.95 and a 10-year back above at a 4.51. How are you thinking and managing what do we see in growth and excitement versus inflation as well on the horizon and potentially becoming unanchored, or is it still very much anchored?
Well, rather than the 2-year, I would look at the 5-year inflation rate, the break-even inflation rate, which has plummeted, which I mentioned from early May. So I think last week, I think I only have data through, as of Thursday, it was at 2.27 from a recent high of like 2.72. So that therein lies, like, investors are looking ahead and pulling back their, broadly speaking, their inflation expectations, not to get into the technicals of the real versus the nominal treasuries and how they calculate that. But the fact that the longer term treasuries are, even though you've got the 10-year back above 2.5%, I think that, but the 30-year is still below 5%. It tells you that those expectations are still, for inflation, well anchored. You would not be willing to, would you be willing to, if inflation was ticking, was like mounting, those treasury yields would be higher because investors would be demanding a higher payout on a longer duration treasury bond. But this is all kind of, I mentioned this last week, worked out the way you would, I would think that the Trump administration would want it to, that the Fed, I think, is on hold until the end of the year, but you have mortgage rates that are going to be stable, if not maybe a little lower. And then gas prices are plummeting. And one of the things that'll indicate these longer term rates is that we're not spending money on a war overseas right now. So it's not just the energy prices, it's also the military spending contributing to the deficit.
Brian, that soundbite from J.D. Vance sounded really interesting. There were new nuggets in there that I'm not sure we totally heard before, that they want to set up a coordination mechanism so that you can demine the strait, so that when there are conflicts that inevitably come up, we can make sure we work through them rather than leading up to more escalation. So that kind of, to me, maybe I'm reading too much into it, sounded like even though we have a deal on the table, we're still going to work on demining so that if things fall apart, that still isn't a lever that they can pull.
So are you saying that we're Project Freedoming on the sly here? Is that what you think the structure is? I think that would be good. I think Project Freedom, as I've said many times, was the thing we should have done 2 months ago, and we should have kept it up to take away their leverage. So if that's what we're doing on the sly, that's fine. I'm good with that. Oil is flowing. I'm happy with that. I'm glad to see oil prices go down. Keep the Strait of Hormuz open. That's Iran's #1 piece of leverage. If they can't shut it, they really can't do anything at this point because everything else has been decimated.
Yeah.
Don't give them any money until they've earned it. That's, I think, the key in this whole deal. One of the problems is they're going to get a lot of money because they're going to sell a lot of oil over the next several weeks and months. And I don't know. Look, there are some people out there saying, well, that's evidence that the deal is bad. I guess my point would be, show me what they do with that money. My bet is they're going to use it to fund Hezbollah, okay? Because that's what they've always done. They're going to fund their proxies. They're going to be bad. That's my bet, too. But let's find out what they actually do with the money. If they get money and they keep their promises, fine. Maybe it's a new day. I doubt it. Like, you're all looking at me like I'm crazy. I know I'm crazy. But I'm saying if they actually kept their promises, it's not a problem if they get money. Now, the issue for me is everyone's making judgments about this deal before they see what happens. And I'm just saying, why don't we actually see what happens first?
Jackie,
the only that what happens that matters right now is the oil moving, and that's happening. That's what needed to happen.
Right at this moment, I agree. Ultimately, what matters, and I share your skepticism because I don't think the International Atomic whatever agency they're not going to be great inspectors. Okay,
that's a very highly statistical term.
That's right. That's right. If we're not inspecting, I don't think it matters. But like that, we can't lose sight of the fact, Jackie. Then I'm kicking it. We can't lose sight of the fact that oil is part of the story, but we didn't go into Iran to shut the strait and then open it again. We went into Iran to get rid of nuclear weapons.
That's correct. And that's why when this deal was first announced and one of the points in the memorandum of understanding was the strait will be opened, I was thinking to myself, well, before this happened, the strait was never closed. So what are we really gaining there? I mean, it's an achievement post-conflict that is important, but that was never the issue to begin with. It was a byproduct of what happened. I don't love the way this whole situation has taken shape, and I think that, I've said this before, that there's information that we probably are not privy to, intelligence we're not privy to, and so I understand the things holding the administration back. I'm trying to find the right words here because I give the administration credit for taking this on. Nobody else would do it because it was so complicated and because it was so hard. But at the same time, because it was so hard, you might not get the result that you want to have. And so I see what's happening right now as backing off of the strait issue, getting oil prices low, because that was squeezing us. Yes, Iran was being squeezed on the cash side, but somehow maybe they were getting cash from China or Russia, or, I mean, they certainly were getting drones from their allies. Somehow they were making it, and this new regime was not collapsing as fast as I think anybody was hoping that it would, and here we are. I think this issue that led to some of the rockiness over the last couple of days, Dagan, that you brought up, the proxies, Hezbollah, Israel, that issue is also extremely complicated. I don't think this gets resolved in 60 days.
No.
I don't either.
But if the strait is open then not that much has changed, except that you had two U.S.-led operations that severely crippled their capabilities of doing something with the enriched uranium that they had right now or creating any more in the near future. The question is, how do you get past that to really finish the job as the president has said?
Let me pitch an idea to you. What if you get to the end of the 60 days, you have no deal? We're hostile with Iran, but we now control the Strait of Hormuz. Is that a win or not?
I mean,
No.
the end of September at that point?
I say that is if we get to the end of 60 days, we have no deal with Iran, they get no cash, but we control the Strait of Hormuz.
I don't think so.
I think we're in a good spot.
Well, I think it puts
Oil's
us in
open.
a good spot for where we are right now. But again, we never had a problem with the Strait before we started the conflict. It was open.
Except for they did have we found out they had a veto over the Strait, which we've removed over these 60 days. That's where I would say it's a win for us. We've removed their leverage. They don't get any cash, and we're free to do what we want.
If this fails, Lindsey Graham did say, if this fails, then you take control of the Strait and you bomb.
I want to end here on a
Wait.
quick market comment.
Can I add one thing that's news of the day? Our Strategic Petroleum Reserve, the stocks accrued in the SPR, fell by another 9.1 million barrels to 331.2 million. It's the lowest level since 1983. But now, based on this waiver on Iran's oil exports, U.S. companies can now buy Iranian crude, except for a period of a couple of years. The last significant years for Iranian imports were 79 and 77. Will we be filling the SPR with Iranian crude?
That would be wild.